Welcome back, fellow speculators, to the Speculator's Edge, where super performance begins and opportunities await. I'm your host, Berg. So today I'm going to show you how you can achieve super performance and make some serious money with the stocks that I've selected out of my proprietary scan list. Okay, these stocks are breaking out to the degree that I like, and they're putting in work. So I'm going to go over the technicals and the fundamentals. Plus, I'm also going to kind of switch it up and do a little bit, things a little bit differently with this. Okay, so I'm going to show you how you can manage your risk and position size accordingly to my AWR method. Okay, which stands for adjusting with risk. Okay, so this will be interesting. It's going to be a ton of education. So other than that, before we dive in, if you haven't already subscribed, please do. You can click on the TSE logo in the bottom right hand corner of this video. Also leave a comment, like the video. If you have any questions, please ask. I'll be more than happy to help you with this. Okay, so thank you for your support and for supporting TSE and also myself. Before we do move on though, I want to let you know that this video is for educational purposes only. Do your due diligence before venturing off into stocks. They are risky, okay? So performance is not guaranteed and it's not certain as towards anything in life. It is your duty to take responsibility for your own actions, okay, within trading. I'm not responsible for what you trade, on how you trade, or what you do within the market. Okay, these stocks are not for recommendation. I am not a financial advisor nor a broker, so I just give education towards for us traders. Okay, so time is money. So let's go ahead and get a move on, and let's go over these charts. Okay. So the first stock that we're going to go over is SITM, which is SITM Corp. Okay, they are in the technology industry, or I meant sector, and the semiconductor industry. Okay, so I personally traded this stock today. I caught this stock at around $119, and of course it's moving up, which is good. That's what we want to see. So so we are in a stage 2 uptrend, as you can tell by the moving averages. Okay, the shorter term moving averages being above the longer term moving averages. So the 200-day moving average is below that 150-day, with the 50-day moving average, of course, moving up above the 150-day moving average. Okay, and of course the 20 and the 10-day moving average is moving up as well. So we do have momentum in this stock today and for the past few days. So practically, when you're trading this stock here, we look for that prior trend of greater than 25%. We do have a trend that's greater than 25%. As well, stage 2 accumulation phase. Okay. Also, what we have is we do have more of a what's called, let's go ahead and go base count real quick. So we do have a primary base here, secondary, third, and fourth. Okay, so here's the thing with this stock being in the fourth base. This could be very tricky right here, and I'm going to show you the reason why I say it could be tricky is because with this low at $75.81, if you look to the left of the chart and you see the low of this other base right here, this base was at the low of this base was at $77.69. What I've observed for several years is that when that low of the base of the base above, if that low of the base above the base below touches the low or surpasses the low of that prior base, it's not really a good sign. It does reduce the probabilities of you actually making a profit. And of course, I'm telling you right now that I bought this stock, but the reason why I did is because This stock to me puts in work, and we do have a double bottom, and we do surpass a lot of resistance, okay, within this base. I like to see that, okay? That is important to see. And all this resistance comes from around 111 to 110, 109, around that place, okay? Also, there is a little bit of resistance right here on this hill right here, which would be around 115, 117, okay? But we're surpassing all that today. And so that's important to me. And so what I can see out of this here is I can see more with this being a shakeout point to where the institutions are more shaking out the smaller investors or the short-term traders or day traders, and they're taking market share right here, okay? They're starting to take market share, pushing the price up, okay? And so that's what we want to see. And so what we're looking for is we're looking for this stock to get up to about $151.78 from where it's at now, okay? So as it's pushing past those levels, that resistance level out of this consolidation range right here, we're looking at that 151.78. Okay, so we do have, price-wise, we do have a decent contraction in price right here. Okay, with kind of this shakeout effect happening right here, but then this bounce back. Okay, this day right here, we do have a nice contraction in price, and it does shoot out. Okay, but what we're waiting for is we're waiting for volume to start picking up, okay, tremendously with this stock. We want to see more demand than what there has been, okay? So if you go and you look right here at this supply, this had a decent, or a pretty decent spill right here, and there was a lot of supply. It's not good to see, but the thing is that we do dry up or contract in volume dramatically, okay, within this base, and that's good. That's what we want to see. But as we make this low right here, we do increase in volume, okay, and selling volume. But the thing is it surpasses, it comes back and it surpasses all of this resistance right here, okay? I'm interested in that because that's telling me that the price action itself is moving past that resistance. It's soaking up this supply, okay, and as it's pushing past that resistance, it's moving strong in price today, okay? This is good action to me. This is more of your tennis ball action, okay? So this is what I want to see. I like it, but I did play this cautiously. I'm very cautious when I do enter in with something like this because, like I said, it could literally fall off a cliff from here. So how I'm trading this stock, when I go to my AWR, what I'm looking for, let's say what on this chart right here, from the high of the day, let's say if you enter in at that 121 at $121.94, you're looking to get, if it gets up to this all-time high at 151.78, you're looking at 24.5%, okay? But let's say that'll be the possibility for reward, okay, with this stock, okay? So let's say for your risk, let's say where you're gonna, where are you willing to place your stop at within this stock? Where do you think this stock is going to break down whenever it reaches that point, okay, where it's actually just going to start its new phase downward, okay? So that's what we're looking for, and the possibility is right here within this 3-day consolidation is the low of this consolidation. This is where I would place my stop at, which would be at the low at $108.53. Usually I place it, 3 cents below that. So I would place it at around $108.50 or $108.49. I like to try to give the stock some room to run, to actually let itself show itself, okay? That's what I like to see. And so I would rather give it a chance to do that for me and to put in the work and to give me a profit, okay? So if we go and look, let's go ahead and do the my AWR method, let's go and look at the worksheet here. So let's say if you started off with an account equity of $10,000, okay? Let's go and say percent willing to risk of the total account equity on one trade. So this is the percent that you're willing to risk of this $10,000, okay? Let's say if you're willing to risk 25%, okay? So you're willing to risk $2,500. Well, out of this $10,000 total account equity, well, what percentage are you willing to lose, or how much money are you willing to lose of your total account? Okay, you got to ask yourself that. So let's say you're willing to lose 1% on this account of the total account equity. So you're only willing to lose $100. Okay, so let's say if you want to change it, you could do 0.5%. So you could do 0.5%. So you're only willing to lose $50 on this trade. Okay, so however you want to change that up, it all depends on you, what your objectives are, and you know what you're looking for risk to reward wise. Okay, or reward to risk. So when I do this, so let's say I'm willing to risk 1%. So I'm willing to risk $100. I'm willing to lose $100. Okay, so I'm only willing to lose 1% of that, my total account equity. So let's say the buy point, let's enter in, let's say we're entering in at $121.94. And let's place our stop at, our stop would be at that low within that 3-day consolidation range. So at $108.53, we're at $108.50, okay? So that puts a risk at 11%, okay? So that's 11% on this. Okay, so again, if we go back and we look and see that from where we're buying at $121.94, if it gets up to that $151, well, that's a 24.5%, so 24.5% reward, okay? So according to our risk, we're risking at 11%. So practically we are 2 times our risk that we're taking, okay? So that means for, let's say if your batting average is, according to your win-loss ratio, is 50%. So you got you take one trade, you win, you take another trade and you lose. Well, let's say if your risk to reward ratio or your reward to risk ratio is a 2 to 1, well, for every trade that you're winning, you're making, you know, a double. You're doubling that. Okay, so you've got that 2 to 1 risk, 2 to 1 reward to risk ratio. So you're going to be making profit consistently as long as your batting average is 50-50, okay? So what I like to shoot for is I like to shoot for a 3 to 1 reward to risk ratio, okay? So I want my winners 3 times as much as what my losses are going to be, okay? So this is how you trade. This is risk management. This is how you risk manage, okay? So this is how it would position size for you if you wanted to enter in on this stock now and according to my AWR method. So as we place our initial buy point, we're buying at $121.94. Our stop is placed at $108.50, okay? So that is 11% from the initial buy to the stop. We're going to buy 7 shares for $900.07 or $907.29, okay? So practically what we're using of the total equity on the initial buy point itself, we're using only 9% of the total account equity instead of 25% on the initial buy, okay? So what I do is I wait for the stock to prove me right. I want to see some more momentum to the upside. So what I like to do is I usually like to place a target for my second buy, usually about 2.5% above my initial buy point. Okay, so you can do whatever you want. You can make it, you know, 1%, 2.5%, 3, 4, 5, but I recommend not going over 5% just due to the fact that it dilutes your reward to risk ratio. And the reason why it does is because if it moves up 5%, well, you've already taken 5% out of the equation for your reward. And so you don't necessarily want to do that. So I take about 1 to 2.5% out of the equation. I'm good with that as long as it's showing me a profit from the start. That's what you want to see. You want to see a winning horse, okay? That's what a winning horse does. It doesn't back up out of the gate. It shoots right out, okay? That's what you want. And so when you buy, what the second buy will be at with 2.5% from the initial buy point will be at $124.99, okay? So you're going to wind up buying 12 more shares for $1,592, okay? So that's going to go ahead and put your whole position in there of 25%. So you will now have $2,500 that you have entered in with. So total shares, you're going to have 19. Total cost will be $2,500, and your average buy price is $123. Okay. So yeah, of course, you still diluted the reward to risk ratio, but not by much. Okay. This is just being cautious. It's entering in cautiously when trading. Okay. So this is all this is. It's to protect you because the markets can get extremely volatile and you just don't know which way stocks are going to go, period, okay? So this is a dangerous game. You can eat or be killed, and I'd rather eat, but I'd rather be cautious too, and because I don't want to be killed in this market, okay? So average buy price is at $123.46. So what we're looking at now is since on those average of the buy price, what our target stop loss is going to be now is at $118. So we got to move our stop up to $118.53. Okay, so our percent target stop loss will only be 4%. So practically, like I said, I like to have it 3 times with my reward to risk. Okay, so I'm looking for 12%. I'm looking for a 12% move, and so that 12% move is going to move us up to $138.28. That's going to be our profit target. Okay, in dollar terms. So also I included the break-even price. So if you want to take some money off or just move your stop up to break even, which would be at $128.40, which is calculated by taking what your profit target and your target stop loss. So practically you're taking the average buy price H10 and the I10, which will be your of course your target stop loss in percent terms, calculated again by the average buy price, and this is where you get your break-even point. So practically all it's doing is moving that up 4 more percent from your average buy price, and that's where you get your break-even point. Okay, so that'll help put you at another stop and keep your risk to reward each time you make a trade. That'll help you keep your profits locked in and keep you consistent as well moving forward and not taking many losses. Okay, so you're just breaking even. That ain't bad, but it ain't great either. But you know what, and sometimes you just got to break even. If the stock is not acting appropriately, the action of the price or the volume that's coming in, there's a lot to that. Okay, so if it's not holding resistance properly, or support, let's put it, because resistance will eventually turn into support. So that's how you would this is how you would trade this here. This is how I would trade it, at least, not necessarily you, but also in my position sizing and risk management worksheet, I put in another position size calculator, which is just practically, it's just a regular position sizing calculator. That's all it is. So it's based on your stop price or stop percent, however you want to do it. Okay, so I do offer all this on my website. at patreon.com/the speculator's edge. I give you this whenever you sign up for one of my tiers, okay, and become a subscriber. I will give you all this information. I'll give you this this worksheet plus the PowerPoints that go along with my stopping method and blueprints and everything. So you will get a lot of information as you subscribe. And like I said, you will receive this as well. So let's go and look at a few more charts. I'm not going to get into the risk management part of these stocks, but I just want to show you a couple more stocks that are looking pretty ripe. They're looking good here. So we got RIOT, which is RIOT blockchain here. As you can see, this stock has had a massive performance back in you know, early November or middle of November, going, you know, all the way into February, in the middle of February. So, excuse me. So this stock here, we are in a stage 2 accumulation phase here. We do have a prior uptrend of greater than 25%. And we are consolidating right here. We are moving, you know, we did move down. We consolidated into a base. And this base would be more of a third base. If you want to go look, this is how you would count this here. We've got one base right here, kind of a cup with handle breakout, another cup handle. So this would be 1, 2, and then we move up kind of like a flag position here, right here. 3, 4, if you want to call this the fourth, or you could call it the third, depending on how you want to see it. Let's be cautious and just call this the fourth base right here. But here's what I like about this chart here is that we do put in some work here within this. So we're kind of rounding out on a pattern wise. We're rounding right here, and we're putting in what, like I said, what I like to call work. Okay, this stock is putting in some work here on the bottom. Okay, and we do get nice tight price action right here as we're developing this little bottoming the danger point. It's also the danger point too right here. But as it's developing this rounding bottom right here, it is putting in work and surpassing these resistance levels and wanting to move up further to, you know, $44.15. Let's say if this stock does get past that $44.15, that resistance level, the possibility of it reaching $61.55 or, you know, $62 is looking pretty good. Okay, we do have nice volume dry up within here, and we do have nice volume coming out, breaking out of these resistance levels here. So also within this consolidation right here, we do have nice volume dry up right here. As you can see, volume slacks off, decreases, and we're starting to really come out of this base, or out of these resistance levels down here at the bottom of this base. So all we're looking to see is this stock climb up on the right side of the base, and that's where we're buying. Okay, so each time it kind of dips, you might want to buy, but you want to make sure that it kind of stays, that it does stay within this within the range of this day's price. Okay, you don't want it necessarily to close this gap and then move lower than this low right here within this little 2 to 3 day consolidation. You don't want to move it. You don't want it to move past this low. Okay, because if it does, then it could be a faulty base and it moves out. So if we're, let's say this is the fourth base right here, the probabilities of it actually moving to the next base is the probabilities of it are lowered, just due to the fact that on each base count, this stock is more obvious. So you have a lot more retail investors coming in. Of course, institutional investors have already taken their profits. They're taking their profits right here on this nice parabolic move right here. So as you can see, tons of supply coming in right here on this day right here. Lots of institutions selling into that, okay, and giving the stock up to retail investors. So you got to be really cautious when entering in on this stock here. But to me, I mean, it looks good because I like this right here as a more of a bottoming phase, a rounding bottom, and it putting in a little bit of work with some decent demand coming in. Okay, so as it gets past these resistance levels, demand is actually chewing up that support, or it's let's say it's soaking in all that that distribution, okay, or that supply, and so that's a good sign. That's what we want to see. So also this is a high alpha stock too at 1,067.36%. It is a high alpha stock. So compared to its you know, competitors or the S&P 500, Nasdaq, this stock has it's a high alpha name. It's a very strong stock. So maybe this might be the beginning of the next run, okay, to the upside. So let's go ahead and move on to Lazy, L-A-Z-Y, which will be Lazy Days Holdings. This is in the consumer discretionary sector and the specialty retailers industry, okay? So this is interesting as a chart itself, as we are in a stage 2 uptrend. We do have a nice, 25% prior run uptrend here. And as you can see, there has been, every time the stock has hit this 50-day moving average, you can see that not just every time, but nearly all the time, you can see that it pushes back up, the price pushes back up. Okay, so this is more an accumulation phase as there's buying on that 50-day moving average from institutions, okay? So as we're in that stage 2 accumulation, we're looking at the base and we're looking at the pattern. Now, if we go and look at the base count, well, what base are we in here? Well, we're more in a primary to secondary base here. So this is kind of what's called a base on top of a base. Okay, so you have a base right here, you got to move up here, then you got another base happening right here. So this would be more of the second to third base right here. And what we're forming here, the pattern that we're forming, is more of a cup with handle right here, okay? And the beauty of this is that we get nice and tight right here within this handle, okay? This handle tightens up, and we do have volume drying up significantly within this handle. And that's what we want to see. We want to see this volume dry up, okay? But each time it touches that 50-day moving average, we do have nice pops. We do have nice demand, nice follow through with price. Okay, so if you want, if you can, or let's go ahead and just annotate this and I'll show you right here. As we're breaking through the handle right here, okay? So we're already breaking through and we got decent volume, decent demand happening right here, okay? So we do have nice contraction within price, and we are near 52-week highs. I wouldn't be surprised if this stock does get up to the 52-week highs, which would be at $25.74. Today it's at $25.40. So we're pretty close, we're about 34 cents off from 52-week highs, also all-time highs, which is even better. Okay, so now as we're looking at that, our super pivot, would come more into near the close in this handle, the highest close within this handle. And the highest close is at $24.87. Well, we already surpassed that right here. Okay, so maybe today I wouldn't necessarily buy right now. I would wait towards the close and see if it can actually hold that $24.87 level, that resistance level. So also it is a high alpha name. This stock has performed very well, and it is moving up on that 50-day moving average and also that 150-day moving average. So this stock is looking pretty good as well right here. Another one, FUTU. So this is FUTU Holdings. This is in the technology sector and the software industry. So what we're looking for is, of course, the prior trend. The prior trend is greater than 25%. This is in a stage 2 accumulation phase. As you can see right here, the moving averages, shorter term moving averages being up above longer term moving averages. We are entering in we did enter into a consolidation phase here. We do have a range as well, so The base that we're in, if we go and count, we have one base right here, cup handle. This would be the second base right here, okay? This stock could possibly run pretty hard right here. This could be a bull, okay? So let's go and look here as to what pattern we have within this secondary base. We kind of have a rounding bottom or a double bottom right here, okay? So with this stock, we do have nice tight price action right here, so we do have low volatility happening. We're about 29% away from the 52-week highs right there. But with volume wise, we do have a lot of contractional periods within volume within this chart pattern, within the base, within the secondary base. And we do have volume decreasing, of course, on this right side of the base, and we do have a lot of volume decrease right here, okay? So Bradley, what we're looking for is we're going to look for the super pivot, and we're going to go back within this base and see kind of, you know, where this is touch points at a lot right here, which really this close would be at $165.68. That's where we want to see within that $165 to $170. We want to see this stock move past that. But matter of fact, what would be decent to take is at $155.43, kind of right here at this resistance. That ain't bad right there. That's actually, and it's actually breaking out from that today. But let's see if it can push past that $157.90 and gain a little bit more traction with volume before buying into that. So kind of let it break that $157.90 level, and this stock could possibly get a move on, okay? So this is also another high alpha stock here. The relative strength compared to the NASDAQ and the S&P 500 has been really strong. This has been an excellent stock, okay? So hopefully this will pick back up. Let's go look at another one here today that popped up on my scan here. This one is a monster. Matter of fact, it's already moved up 15% more from where I saw it, or where it broke out, okay? So this stock is, if you're going to trade this stock, I wouldn't even be trading. I don't know. To be honest with you, it's a monster. When I caught it, it was down here around $17.46, somewhere in that range whenever it popped up on my scan this morning. So yeah, this stock has already moved up 15%, but I'm just giving you kind of a taste as to what pops up on my scans and my proprietary scans, okay? This is, yeah, some high momentum stocks here with large volume, very nice. I mean, yeah, this stock looks pretty well rounded right here, entering into, which was a beautiful stage one right here, consolidation phase, and massive volume right here, over 154 million shares being bought within the week. Not a very good close though on the week right there, but this is moving out of the secondary base, which is kind of like a double bottom right here. So other than that, yeah, this stock, so if you were actually buying on this stock for a super pivot, if you're looking for the super pivot, your super pivot would have been right around here on this highest close, okay? This close was at $15.38. Let's say if you put a trigger or an alert out for that, for whenever that price got to that point or reached that point right there, if you would have bought last week, well, you'd already been up 31.18% this week, which is pretty crazy. I mean, that's awesome. But let's say if you wanted to go back and you said you take your stock and you say, okay, well, the resistance level is at $12.65. Let's say if you bought at that $12.65, okay, and of course that broke out right here on this day, the 2nd of June. Well, look at this here, okay? Well, now look, boom, you're up, you're moving up 54, 55, 56% right here in the matter of 8 days. I mean, this is what super pivots are all about. This is where when that resistance gives up and you have demand coming in just gobbling up shares at that resistance point. Look how it just runs. I mean, that's what happens is supply gives and the demand just comes in and fuels the price. I mean, what a beautiful move in this. Okay, so not a bad trade, but just if you do enter in on this stock, just be very cautious. Don't doubt that tomorrow it does have a down day. Not for sure. I'm not saying that for positive fact because we don't predict. We trade day by day. We trade in the presence. Okay, so we don't really know what's going to happen with this. Okay, so just be cautious when you enter in on this stock. If anything, tighten your stop. Keep your stop tight. Okay. So also. I think for now, let's go ahead and leave it off right there for that. Let's go look at the fundamentals of SITM, RIOT, Lazy, and FUTU. Okay, let's go look at those there and let's see what's going on. So with SITM, what we have is the industry group rank is 117 with a group relative strength rating of a C, which isn't bad. It's not great, but it is what it is. So the composite rating is 82. It is ranked number 10 out of its competitors, and this company designs and markets resonators, oscillators, and clock ICs to provide silicone timing system solutions. Okay, so the earnings is on August 5th, which is good. That's a little ways out. We did have some massive earnings here. The last 3 quarters earnings per share growth has been 229% with 1 quarter of earnings per share acceleration. We did have a 236% change in earnings per share last quarter. Also, the SMR rating, which is a sales margin return on equity, is a B. Excellent. The sales percent change last quarter was 63%. The only thing is the 3-year sales growth rate is only 10%. Not so great. Annual pre-tax margin, not so great. Annual return on equity, not so great. But here's the excuse me. Here's the thing with this is that we do have a lot of accumulation and distribution. We do have some accumulation within this stock. It's at a D+. We do have a green light on that, but we do have 34% change in funds owning the stock and 5 quarters of increasing fund ownership. So we do have institutions coming in on this stock buying. Okay, like I said, just be cautious entering in on this stock. This stock could get dangerous just due to the fact of that low surpassing the present base. Surpassing the low of that prior base. Okay, so just be cautious, and especially with the 4th base, just be cautious entering on this stock. Okay, it could have a lot of room to move, but we don't know that. Okay, so let's go look at RIOT. Let's see what's going on with their fundamentals real quick. Composite rating is 85. It is ranked number 18 out of its competitors. This provides exposure to the blockchain ecosystem through targeted investments in this sector. It is in a strong industry group. Okay, the industry group rank is 30 out of 197, and it does have some. It is good relatively on the strength. Okay, the group relative strength rating is A. We do have earnings on August 10th, so it's a ways away. The earnings per share percent change last quarter was 175%, and the number of quarters of earnings per share acceleration is 2. Okay, so that's good to see. The sales percent change last quarter was 871%. The 3-year sales growth rate has been 75%. It's a beast, man. They are making some sales. Okay, so their product is selling. We do have 61% change in funds owning the stock and 4 quarters of increasing fund ownership. That's good to see. That's what we want to see, is this is in that stage 2 uptrend. Okay, especially with the bottoming right here. Okay, and starting to move up on the right side of the chart. The accumulation distribution rating is B. So of course, like I said, there are funds, there are institutions in on this stock. Okay, so they are accumulating shares. Let's see. Let's go look at Lazy real quick, and then FUTU, and then we'll end the video here. Sorry for it being so long, for taking so long. I've been trying to switch up a few things. I'm going to start working on StockCharts.com's ACP platform, which is Advanced Charting Platform. I'm going to get used to that so that you can see. Also, I didn't annotate the charts, of course, this morning, but I just wanted to show you kind of, you know, what how I look at it just from more of a purist form without any annotations on the charts. We'll be going back to the annotations on the charts, just not today. So tomorrow I'll be back to doing that, and of course we're going to do the risk management, but I'm only going to be selecting a couple of charts because the risk management and position sizing takes a little while. So it takes a little while to explain, and for you to understand. I want you to understand that part, because that is the most important part in trading, besides your trading psychology, objectives, your chart reading, your fundamentals. There's so much that goes into trading. So other than that, Lazy, this is a composite rating of 90. We are ranked number 1 out of its competitors. This operates 5 dealership locations and provides a portfolio of products and services for a recreational vehicle, RV. Okay, so the industry group rank sucks. It's 156 out of 197. Not great, with the relative strength rating, group relative strength rating of a D. So not so great industry-wise, but let's go look at the fundamentals of this stock. And it is a monster. Earnings per share percent change last quarter was 368%, with the number of quarters of earnings per share acceleration being 1. We do have consecutive years of annual earnings per share growth rate has been 1. Earnings per share percent change for current year is 74%. Okay. So let's go look at the sales. Are they making sales? Are they actually selling their product here? And of course we can see that the SMR rating is A. So sales percent change last quarter was 36%, which is excellent. The annual return on equity is 33.1%. These guys have made some sales because of the COVID. People wanting to take vacation and just travel. So yeah, they've been making some sales on that. The accumulation distribution rating is a B+, with the 30% change in funds owning the stock and 5 quarters of increasing fund ownership. So we do have accumulation within this stock. We do have institutions buying the stock. Okay, so this is not a bad trade. The only thing is the industry group rank does suck, being 156 out of 197. Okay, not great. Other than that, let's go look at FUTU real quick. FUTU. Let's go explore the fundamentals here, and let's see. It is ranked number 1 out of its competitors. Composite rating is 99. This is excellent right here. This is a China-based company, operates as a holding company that offers an online brokerage platform. Okay, so they're more into the investment services. So, of course, as you can see, ranked within finance, investment bank, and brokerage group. So, this industry group rank is at 47. That's excellent out of 197. This group relative strength rating is at A-. The fundamentals are pretty mind-blowing right here. Earnings per share rating is 84. The earnings per share percent change last quarter is 531%. The last 3 quarters average earnings per share growth is 1,070%. This is a beast right here. Absolute beast within the fundamentals. Okay, the 3 years earnings per share growth rate is 187%, with 4 consecutive years of annual earnings per share growth. Yeah. Yeah, the fundamentals of this stock is just unbelievable, and it's not a bad choice to be buying within this stock, because this stock could have a lot more room to run. So you think that $150 is expensive? Well, think about it going up to $1,000 a share. I mean, Amazon did it. Numerous stocks have done it. You know, Apple, Tesla. You know, come on. So $150 really, it's not expensive. It's pretty cheap, especially where it's at within its base and the pattern within the price itself. It's pretty cheap. So the fundamentals are excellent, period. So sales percent change last quarter was 348%. The 3-year sales growth rate has been 100%. Annual pre-tax margin 18.3%, with the annual return on equity being 25.2%. This stock is all about is well-rounded, technically and fundamentally. Okay. 4 quarters of increasing fund ownership with 61% change in funds owning the stock, with the accumulation distribution rating being a B+. So we do know that this stock is under accumulation, and we do have institutions buying this stock, so accumulating this stock. They're eating this one up. Excellent news. It's good to see. So other than that, I'm going to go ahead and get off. But before we do end this video, I want to thank you for watching and supporting the Speculator's Edge. I hope you found the material informative and that you enjoyed it as well. Please subscribe if you haven't already, and drop a comment, like the video, and of course, like I said before at the beginning of this video, if you have any questions, please ask, leave a comment, and I'll be more than happy to answer you, okay, and help you out with that. Also, I posted a link down below this video that you can log into or go to the Speculator's Edge on my Patreon site, which is patreon.com/the Speculator's Edge. And look through the tiers, and please subscribe to one, because when you do, there's going to be a ton of opportunity for you to learn, to understand how to trade stocks. You get to follow me with that and receive my proprietary scan list. It's very exclusive. These stocks, these are stocks that are breaking out and having some extreme momentum, and possible super performers to take your trading level to the to a higher realm. Okay, so if you haven't already, also check out my intro video too on YouTube here. I want to thank you again for watching. Here at TSC, we trade in the present. We study the past for knowledge, and we follow the process of trading to build our future. So thank you again for watching, and opportunities await, my friends.